Welcome to the Syndicate Room, the AI-generated podcast from AdValorem Syndicate, where we break down the biggest moves in venture, tech, and markets. Full disclosure up front, this show is entirely AI-produced. The research, the scripts, the voices you're hearing right now, all artificial intelligence. We think that's kind of the point when you're covering a world being reshaped by AI.
And I'm here to argue with you about all of it. Let's go.
So the big story this week, $1.1 billion in robotics funding in a single week. 3 deals. Mind Robotics, $500 million. Rhoda AI, $450 million. Sunday Robotics, $165 million. All Series A or B. None of them have shipped a product at scale yet.
And this is the part where people start screaming, bubble, right? $500 million for a company that's been alive for 4 months.
4 months. Mind Robotics was spun out of Rivian in November. They raised $115 million seed. Then Excel and Andreessen Horowitz lead a $500 million Series A at a $2 billion valuation. Total raised, $615 million. Total revenue, 0.
Zero. But here's the thing, the thesis is actually interesting. RJ Scaringe is saying, look, we have real factory floors, real manufacturing data, real production problems. Classical robotics can do the repeatable stuff, but the dexterous, reasoning-intensive work? That's still humans.
And the spin-out structure is clever. You get access to Rivian's entire manufacturing environment for training and testing, but you don't inherit the EV balance sheet headaches. It's like getting the data without the drama.
The data without the drama. I'm stealing that. Rhoda AI is the one that really caught my attention. $450 million Series A. They were in stealth for 18 months training robots by watching hundreds of millions of videos.
Video predictive control. Instead of programming every movement explicitly, the robots learn from watching demonstrations. If it works at scale, that solves the single biggest bottleneck in industrial robotics: programming time.
Programming time is the unsexy answer to why we don't have robots everywhere. It takes weeks to program a robot for a new task. If you can collapse that to hours by showing it a video, that's a platform business.
And Sunday, the consumer play. $165 million for a household robot called Memo. Cotu led it. Tiger Global, Benchmark, Bain Capital, Fidelity all participated. These are generalist funds, not robotic specialists.
When Fidelity is writing checks into household robotics, the market is signaling something. They deploy based on TAM analysis and unit economics, not technology optimism.
Add it all up with Aptronix $520 million from Google and Mercedes-Benz in February, and Q1 2026 is on pace to shatter all records. The question for our listeners is, where do you position? These companies are already valued in billions, but the value chain underneath, the components, deployment infrastructure, training data, that's where syndicate-level investors can still find asymmetric entry.
Speaking of which, AdValorem Syndicate has an active AI robotics SPV targeting positions in the robotics value chain. Details at gp.advalorem.io. They also just published a deep dive analysis on this exact funding surge.
All right, topic 2, Anthropic versus OpenAI. The AI revenue race just got very real.
Very real. OpenAI is at $25 billion annualized revenue. Anthropic is at $19 billion. That gap is closing fast. Anthropic was at $4 billion mid-2025. They 5x'd in under a year. Claude Code alone has a $2.5 billion run rate.
Think about what this means for the pre-IPO market. 2 AI companies generating tens of billions, neither one public. The SEC chair just told the All In podcast that fixing the IPO drought and changing accredited investor rules are top priorities for 2026.
If they lower those barriers, the demand for pre-IPO access explodes. AdValorem's quantum computing pre-IPO positions are built around exactly this thesis. When companies this large stay private this long, Pre-IPO investors capture the most value.
Last topic, the Iran oil shock in the energy infrastructure trade.
Brent crude hit $83. Strait of Hormuz disrupted 20% of global oil supply. Goldman says if it stays closed, $100 oil. But here's what people miss. Energy disruption is the energy infrastructure investment argument. When 20% of supply is at risk from a single choke point, anyone building energy independence gets a massive tailwind.
Which brings us to Venezuela. As Iran escalates, Venezuelan heavy crude becomes an alternative supply source. Sanctions easing, grid infrastructure deals. AdValorem has a Venezuelan power infrastructure fund positioned around exactly this.
If you want to go deeper, AdValorem publishes daily research in their Insights section, runs investor dinners in New York and New Jersey, and the community is active on Discord, AngelList, and Substack. Apply to join at gp.advalorem.io.
Plus, there's a full education library, ebooks on angel investing, crash investing, syndicate investing, and audio courses, all at gp.advalorem.io under Education.
Subscribe to the Syndicate Room wherever you get your podcasts. New episodes Monday, Wednesday, Friday.
This is an AI-generated show. The analysis is real. The data is real. The voices are artificial. But the alpha? The alpha is very much real.
See you Wednesday.
See you Wednesday.